Good afternoon, everybody, and welcome to ICB TV number 99. We're getting rapidly closer to 100. Thank you for joining me, those of you who are live. If not, I hope you're enjoying this if you're watching the recorded version. This is the second of two presentations I'm doing on the changes to customs, VAT, imports, exports that's going to happen on the 1st of January. Now, yesterday we spent some time looking at what's happening to imports, and today we're going to be looking at what's happening to exports and the changes to the VAT situation when you're selling goods abroad. Now, I had a couple of queries that came out from yesterday's presentation. I'd just like to pick up on a few of them before I start. If you're watching the first presentation back, there was a slide on there which had the dates for border control changes, and two of them, the first two, I think, actually say January and April 2020, and they should say 2021. So apologies for that. And there were a few other questions which I will deal with later on. So I am going to share my screen and we'll get started on the presentation for today. So let's start here with the EU transition and export. So I'm just going to start with a few introductory comments that we covered yesterday. So just to remind you, the United Kingdom left the EU last year, and we've been in this 1 year, this 12-month period called the EU transition, and that comes to an end on the 31st of December 2020. So from the 1st of January 2021, regardless of whether the UK agrees a trade deal with the EU, we will be sort of using these new rules that are coming into force. Now, the trade deal covers things like various customs and excise and various transportation, what's happening to individuals. That is still what's trying to be decided, but the VAT side of what we're looking at today is fixed, and that should be fine. So when we come on to look at that, that is actually what's going to happen. So all the invoicing and treating of VAT between customers, suppliers within the EU, that's now all been approved, and how we're going to deal with that, and that's not going to change. Any business who moves goods into and out of the EU will need an economic registration and identification number. That's an EORI number, and that must start with the letters GB. Now, if you're already trading with businesses outside the EU, you will have one of these EORI numbers already. If you have one, you do not need to apply for a new one, because that will just carry forward. Now, any businesses who are moving goods through Northern Ireland will need an EORI number that starts with the letters XI. Now, we're going to have a look at this as we work through. And just to remind you that Northern Ireland is in a very specific situation. So I'm going to be referring to the United Kingdom, UK, which covers England, Northern Ireland, Wales and Scotland. And then I'll also be referring to Great Britain, or GB, which is, of course, England, Wales and Scotland. And then the way we deal with Northern Ireland and the way Northern Ireland deals with Europe and everything else we'll cover towards the end of the presentation. So let's have a look at what's happening inside the UK, first of all. Not a lot's going to change. Any business that's trading within the UK, so this is with Northern Ireland as well, the situation remains exactly the same. There are going to be no changes for this. So our VAT threshold remains at £85,000 at the moment. That may or may not change in years to come. And you will charge, once you're VAT registered, you will charge VAT to all your customers depending on the percentage of VAT that's in force. So it could be standard rated, it could be reduced rate, it could be zero rated, it could be exempt, could be any of those depending on what you're selling. And there are also some adjustments that we will need to look at to cover the situation where the item falls under the domestic reverse charge scheme. Now, you'll hear me mention the reverse charge scheme quite a lot through this, because it's something that we've started to get our heads around in the UK. Some of our members will have dealt with it already. If you've been dealing with sale of purchase of services with EU business to business, you will be aware of this. but it's becoming more into the domestic VAT system and the The one that's going to come our way fairly quickly is the new CIS scheme, which is moving into domestic reverse charge from the 1st of March 2021. Now, we've covered that in a presentation elsewhere, so that's available for you if you want to watch and find out what's happening about that. Now, the VAT on transactions between Great Britain and Northern Ireland will remain exactly as they are at present. Again, I'll cover this later, but if you're dealing with a business and you're transferring goods and services between businesses in Great Britain and businesses in Northern Ireland, that falls within the UK VAT system, and there will be no changes as far as the VAT is concerned. However, changes may occur if you're making your sales through an online market. So things like eBay and Amazon, anything where you're buying and selling through an online marketplace. Now, the VAT rules for that are changing, but we're not going to cover those in today's presentation because it's a very complex issue, and we will hopefully come back and deal with online market sales in a completely separate presentation. So let's have a look at the current situation with non-UK sales. So when we're selling goods overseas, these are the sort of things that follow. So if you are selling to customers outside the EU, so you're looking at somewhere like, I don't know, China or America, that sort of thing, these are sold and exported at 0 rate, providing that all the relevant rules are followed. Now, we are going to look at what the rules for export are in a moment. Now, if you're selling as an export, no VAT will appear in your return at all. So nothing goes in the top box. Box is box 1, which is your sales VAT, because you're exporting and it's being sold at 0 rate. But the value of the sale will appear in box 6 of the VAT return. Now, if you're selling abroad and you're exporting goods, you should be aware that the customers may have to pay import taxes in their own country. Now, yesterday, when we were looking at import VAT, we were the importers, we were businesses that were importing into the UK. We looked at things like import taxes and how they worked within the UK at the moment. Now, so therefore, it means that if in the reverse situation, if you're selling outside the EU, you're selling to customers outside the EU, they may also have to pay import taxes in their own country. Now, if you are selling to non-VAT registered customers within the EU, you can charge VAT as normal and report it on your UK VAT return. It only happens that you need to change the way you charge VAT to your business to consumer customers if the value of the sales that you make to any particular EU country goes above the distance selling thresholds, which is on average around 35,000 euros a year. Then what you will have to do is you will have to report that VAT, you'll have to charge them VAT in their own country and report that through their own UK VAT return. And that's quite a complex procedure. I don't know whether we have any members that are involved in that because they have clients who sell that amount. But if so, they will know what they've had to do. And that is the current situation at the moment. Now, making sales to VAT registered businesses in the EU, we're obviously looking at the business to business B2B EU sales facility. So this is where you exchange your VAT numbers, you sell with no VAT, you don't charge VAT on the invoice, and no VAT appears on your UK VAT return because it's 0 rated VAT. But the value of the sales or outputs must be recorded, and that will be recorded in box 6 as a sale and box 8 as an EU sale, but no VAT appears in the top half. But what you will have to do also is to complete an EC sales list, which details what's being sold to each country. Now, let's start now to have a look at the situation from January. Now, this is England, Scotland and Wales, so this is Great Britain. Again, I'll come to Northern Ireland in a moment. So, because we are now outside the EU, all goods leaving Britain from the 1st of January will be subject to export rules. Now, this is exactly the same whether you're selling to outside the EU or you're selling to any country within the EU. They are now treated as exports, not as business to business or business to consumer sales. And the export rules will apply to all transactions outside, for now, outside Great Britain. Remember, if we're selling to Northern Ireland, that is part of the UK VAT scheme, so normal VAT rules apply. There are other special rules, which, as I said, which are going to happen if you're moving your goods from Great Britain to Northern Ireland, or moving through Northern Ireland to other countries in the EU. Now, when you're exporting, you will have to make various customs declarations. And at the moment, I read on, I think it was the BEIS website, that they reckon that maybe 80% of UK businesses who perhaps aren't dealing with exports at the moment, but who are dealing within the EU, may not be ready for this for the 1st of January. Now, that is a very, very scary percentage of businesses, that 80% will not be ready. And one of the biggest changes that you're going to have to make, or your clients are going to have to make, is that you have to have all your registrations in place. You may need to have licenses. You've got to have customs declarations to export. And you may have seen on the news that at the moment in France, they're doing, they're testing on various checks in France as lorries travel from the south coast through to France. And there are huge holdups and delays in Kent again. And I think this is going to happen for a while until the system gets set down. If you don't have all your customs declarations in place, you will not be able to move those goods out of the UK. You may not even be able to get them to the port of exit, because there may be checks en route once you've made some declarations that are going to actually check that your paperwork's in place, and the lorries will be turned around if not. So it's very important. Now, hopefully, our members won't be dealing with the large export companies. You'll be dealing in small goods that are going on a one-to-one through a recognised freight company, or you'll send it out through Parcel Force or something like that. And we won't actually have these huge problems, but you will have to make some customs declarations. And as a supplier, you may also need to obtain certain licenses. Now, I'm not going into what these licenses are going to be. If you are selling specific goods that require a license, you will have to have those licenses to sell goods into the EU, whereas before you may not have needed them because it was all part of a single EU customs system, and we didn't need to have these licenses. Now, there is something called the Common Transit Convention, and any import duties that might be payable at the other end, if you are traveling goods through countries to reach the final destination, those import duties will not be chargeable until the goods actually arrive at their end destination. Now, however, it says safety and security requirements will still need to be met. So traveling through interim countries may mean that if their authorities think that the particular transport is unsafe, they can stop it and inspect it and do whatever. But at the moment, import duties are only payable by the custom at the far end. So if you're buying goods in, for example, from Greece or Spain or something like that, and they're traveling all the way through Europe, it's only when those goods arrive in this country that you will need to deal with the import duties. And we looked at import taxes and duties and how to deal with that yesterday. Okay, so now let's have a look at what happens with exports. This is actually sending out the goods. Now, I'm assuming that these are individual goods that you're selling to customers abroad. It doesn't matter where they're selling to. Now, there are two types of exports, and they are direct and indirect exports. Now, what is the difference between them? Now, direct exports are ones where these are specifically taken out of the country either by the seller or by their agent. Now, you could sell some goods and take it out in your own baggage, in your own transport. You can send it by some postal or rail or courier service, or by a shipping line, airline or freight forwarder that you employ. Sorry, that should say airline or freight forwarder that you employ, but not your customer. So the direct exports are where you are selling goods out of the country and you are responsible for the transfer. So therefore, an indirect export is one where actually the customer is responsible for the export. So provided that the overseas customer or their agent collects and arranges for the collection of goods and takes them outside of the UK or the EU, then that also counts as an export, but it's an indirect export. but you must have the appropriate documentation to prove that it is actually being exported. So there are some conditions that must be fulfilled for an export, which is then 0 rated for VAT. So any export is 0 rated for VAT. But the goods must be exported from the UK within a period of normally 3 months. So 90 days is usually the period, 90 days. So from the point of sale, those goods must leave the country and you must have proof of export documentation within the 90 days of the sale taking place. And on occasions, there must be some supplementary evidence of the export. Now, I'm not 100% certain what that is, but on the HMRC website, it does say supplementary evidence must also be obtained. And I would imagine that there is supplementary evidence depending on the goods that you're actually exporting. So that may be for things like plants, live exports and that sort of thing. Foodstuffs is something which could very well ask for supplementary evidence, and the fact that they're being transported safely and so on. Now, if the export is an indirect export, you have got to be very careful to check, because you're not responsible for the exportation, you've got to check that the goods are actually being exported. So you cannot supply them to a private individual who's resident in the UK, because you have no proof once you've delivered it, it's going to be exported. You can't supply it to a customer with a place of business in the UK from which taxable supplies are made. So that customer may live abroad and you may be sending it to him, but if he has a place of business in the UK that's making taxable supplies, you can't export it. You would presumably have to go through his UK business first. And it mustn't be delivered to or collected by a UK customer at a UK address. So you cannot have someone come into you and say, I'm going to collect this and I'm going to take it out the country. I'm flying out tomorrow, therefore I'm exporting it, therefore it's 0 rated. Now, if the customer does that, you're going to have to charge them VAT, and they are going to have to then reclaim the VAT at the port of export. So if you've been to an airport, you might see an EU reclamation desk where you'll see lots of people from abroad queuing up with their proof of purchase that they bought stuff and then they're claiming the VAT back, and they will do that at the airport or the ferry port or however they're leaving the UK. So if you cannot fulfill all those conditions, you must charge full VAT on your sales. And if the goods are sold for export and then for whatever reason they're not exported, the full VAT must be charged. This is as it stands at the moment. Now, either inclusively or exclusively. So if you've sold some goods to a customer at 0 rate and then you suspect or you find that they have not been exported, you must either charge them the full VAT, or you take the value of the sale and you declare that as inclusive of VAT, and you will have to adjust your VAT return and send the inclusion part of the VAT to HMRC on your next VAT return. So let's have a look at non-digital goods. So this is the VAT side of what's happening if you're exporting goods. Now, if all of those conditions on the previous slide are fulfilled, so that's your customs, proof of export, etc., then the goods can be registered, can be 0 rated for VAT. Now, this is regardless of whether your customers are VAT registered or non-VAT registered in the country of destination. Now, at the moment, if you're selling goods to a private individual in the EU, you have to charge them VAT. But providing that you've got the proof of export, if you are exporting goods to a private individual, you now no longer have to charge them VAT, which should make the invoicing much simpler. Now, therefore, as there is no VAT, the value of the sale will only appear in box 6 of the VAT return. Remember, we are not part of the EU, so box 8 will not apply because we're not selling to business customers in the EU, so we will only appear this in box 6. And believe it or not, that's the easy bit, because you will have to have the relevant documentation to prove your export. Once we start to get for the treatment of sale of services, and even worse, digital services, the whole thing becomes much more complex. So now we're going to have a go at this. So let's have a look at VAT on the sale of services. Now, as bookkeepers, you're based in the UK. If you have, Great Britain, Northern Ireland's different. If you have a customer who is based in, say, Italy, and you, for whatever reason, you do their books and you do this online, or you're selling the service, or even if you actually go to the country to provide that service for a customer, this is what we're looking at here. Now, when you are selling a supply of service, the VAT treatment is very different, because when you're supplying goods up to the distance selling threshold, it's the VAT in the country of origin, so the UK, that decides on the VAT that's being sold. But once you sell a service abroad, you are changing your place of sale from the point of origin to the point of destination. So it depends on where the location of the customer is for charging services. Now, this is as it happens at the moment. So if you have that customer that's based in Italy and you go and you perform a service there, you should actually charge them services. You should charge them VAT in Italy and pay VAT to the Italian VAT authorities. Now, that's for non-VAT registered. Now, if you are supplying a B2B EU service, so that's your business to business, that's a reverse charge, and you treat that accordingly. Now, that means that if you're selling your service as a B2B, you're charging 0 rate, but you have this note on the invoice that this is subject to the reverse charge scheme. So your customer must treat this as a reverse charge in their country. Now, yesterday we looked at the reverse side of this. We looked at UK businesses buying services from the EU. The EU business to business of selling it to us at 0 rate. We were treating it as a reverse charge. So therefore, it was appearing in box 1 and box 4 of the VAT return. So it depends on whether you're selling or buying the service. Now, today we're looking at selling. So you will sell those services at 0 rate and put a note on there. And as I said above, business to consumer services are fully VATable, subject to distance selling rules. Now, the change comes from the 1st of January, when HMRC have confirmed that selling goods and services, such as bookkeeping, to your private and non-VAT registered customers in the EU will no longer have VAT added, but they may be subject to the reverse charge on the customer side. So if you have your client and you're selling this service and you're charging them VAT, you can now do that at 0 rate. You don't have to charge them VAT anymore. Now, that is a change that's come out and been confirmed fairly recently by HMRC. So from January, the supply of services of a service to all customers outside the UK will be counted as 0 rated sales and will only appear in box 6 of the VAT return. So exactly the same as for the treatment of the sale of goods. Now, if you are in receipt of that supply of service, this time we're buying, the reverse charge will apply. So VAT will appear in box 1 and box 4. Now, this has set up something which I have to say I'd never considered before. Because you are putting it in box 1, it is counted as a supply of a service, almost like a sale, as well as an acquisition of that service. So it's both considered to be buying and selling. Now, what I hadn't realized is that the value of that supply of a service that you are buying in, because it counts as a taxable supply, it increases the value of your supplies. And if it takes you over the VAT threshold, you should register for UK VAT. Now, it was only when I was doing the detailed research for this that I picked this comment up, and I have to say, I'd not really thought of this before. And I'm going to go back to something else which we'll pick up later, but this is going to happen to reverse charges within the UK as well. Now, with the CIS, just diverting away from EU, with the CIS, we now have this complex reverse charging system going up through the supply chain. And if at some stage a subcontractor, a contractor who is perhaps not VAT registered is receiving invoices from a VAT registered subcontractor, that's going to affect the turnover. So it might mean that people who are involved in this reverse charge scheme could have to apply and register for UK VAT. And we will come back to this probably in the new year, but it's something to watch out for. Now, the last one is VAT on digital services, which again is very different. And for those of you who are aware, this is the bit that falls under the VAT MOS scheme, the mini one-stop shop. Now, if you're selling digital services, and digital services, there is a list of them, to any business, whether they are VAT registered or not, VAT must be charged at the level due in the country of destination and VAT paid to that country's VAT office. So the business-to-business system does not apply for the sale of digital services. Now, how did this arise? Well, some years ago, it started off with it started off with the sale of telephone chips by various countries. Now, because different countries have different VAT thresholds for registering for VAT, and sorry, let me just unplug my phone, stop it ringing. Sorry about this, folks. Okay. Because different countries have different VAT thresholds for registering for VAT, and because different countries have different VAT percentages that they charge, there was a system in place where certain companies that were charging and selling things like mobile telephone chips and various other things were trying to minimize the amount of VAT that was paid and charged. And the EU got onto this very quickly and thought, well, this is unfair because some countries are benefiting much more from the sale of these than others. So they've introduced this selling digital services. So whichever country you're selling from, it doesn't matter what the VAT level is. It's the VAT level of the country where the customer is that determines how much VAT you charge, and you do have to charge the VAT. Now, that means that you have to register for VAT in each relevant country. So to avoid this, because if you think some companies are selling to me, I don't know, however many European countries there are, to avoid this, the EU have set up something called a VAT mini one-stop shop, or VAT MOS. Now, this came in a few years ago now. And basically what this means is that you charge the VAT and you collect the VAT at that country's level of VAT in your sales invoice, and you collect the VAT in this country. You then have a VAT MOS account with HMRC, and each quarter you will upload all the information on how much VAT you've claimed from each country at which level. And then you pay that VAT to HMRC. Now, what HMRC does is it collects all those bits of VATs in, and then what it should do is it should send out all the VAT that it's collected to each country. But if you think about it, all the other countries are doing exactly the same thing. So everybody will be sending VAT backwards and forwards here, there, and everywhere. So what the EU VAT system allows for is that there is some sort of an offset. So it may very well be that no money ever actually changes hands. It's purely a nominal credit transaction. So we owe France this much, France owes us this much, therefore the net, this is the net change. And that happens with all the countries within the EU. Now, the problem is, if you register for VAT MOS in the UK, you must also register for UK VAT, because you can't have a VAT MOS account without a VAT account. But if your turnover is below the threshold, even though you're charging VAT to your European customers, you don't actually have to submit a normal UK VAT return until the level of your UK supplies goes above the VAT threshold. Now, this is really simple, isn't it? Not. So I hope you're with me. So this is what's happening. Now, the problem is, because we're leaving the EU, our VAT MOS system can no longer be part of the European VAT MOS system. So after the 1st of January, the UK businesses who are currently involved in the MOS situation, and I know we have members that do have clients registered under UK VAT MOS, You can no longer use your UK VAT MOS system to declare and pay that VAT that's due in the EU member states. So you've got a couple of choices. So now we are back to actually paying the VAT to the European tax authorities. Now, the way around this will be to register for the VAT in a country within the EU. Now, if there is a country that your clients deal with the most, that's the country that I recommend that you deal with. Otherwise, you're going to have to register in every country, and you're going to have to do this as soon as you make your first digital sale. Now, I know that we have a member, because I've spoken to this member before, who has a customer who streams music all over Europe and the world. They have a website, and they sell streamed music. Now, at the moment, that would be treated through the VAT MOS scheme. But from the 1st of January, they're going to have a country in which they register their VAT, and they declare and they pay their VAT through that. Now, that is going to become quite complex, I think. What I would say is that I would imagine by now, for anyone who's covered by VAT MOS, HMRC will have contacted you and will have sent out all the information that you need to allow you to decide with which country you are actually going to register for this. Now, in the last week, I have noticed an article that's come out from the EU VAT office, so Europa, and there is a system which is currently being designed to allow a single cross-border one-stop shop, because this is going to be extended beyond the sale of digital services. Now, it's outside what I want to talk about in detail today, but just be aware that if you are involved in VAT MOS, you are going to have to register with the country, and we need to watch this space, because from July, hopefully, that will become a bit more simple. Now, we come to Northern Ireland. Now, we mentioned Northern Ireland yesterday, and I talked about the Northern Ireland Protocol a little bit, and I did say I would go into it in a little bit more detail today. Now, for goods that pass through Northern Ireland to the rest of the world, there've got to be special rules because of the various systems that are in place. Now, we have the Good Friday Agreement, which is now over 20 years old, but is still valid. There is this free trade movement across the Irish border. So therefore, as you're all aware by now, we've got to look at both scenarios, because the Northern Ireland is part of the UK VAT system and part of the EU VAT system, but it sits within the EU customs area as a single customs authority. So again, it's extremely complicated. Now, it will take effect on the 1st of January, but the final details still have to be agreed. And as of Monday, I'm still not sure it's been signed off yet. But anyway, it has been set up to ensure that there's protection for the many small businesses in Northern Ireland that deal with GB and still have access to the EU. So it's tried to make trade for those small businesses as simple as possible, because if you look at the statistics that are currently in the Northern Ireland Protocol document, and it makes fairly easy reading actually, 56% of all trade that's carried out inside Northern Ireland is actually with Great Britain, so more than half. And a further 16% of all trade in Northern Ireland is actually with Ireland. Okay, so that leaves 22% of Northern Ireland trade outside the EU. So that's where they start to fall into the normal import-export rules that the rest of GB does. But to cover that trade, and because of that free access across the Irish border, this is what the protocol has been set up to do. Now, it's much broader than VAT because it actually covers human rights, the common travel area, customs and trade, regulation of manufactured goods, the single electricity market, which is a whole ballgame in itself that we're not even going to look at, some limited state aid provisions, VAT and excise duties. So it covers a host of goods. Now, under this, the people of Northern Ireland have been given the right to have this reconsidered every 4 years. So the whole protocol will be looked at again in 2024 and may well be adjusted. Okay, So that's what the Northern Ireland Protocol is. And you can find it if you do a search, you can read the document if you want to. Now let's have a look at Northern Ireland then. The easy bit is where we're trading between Northern Ireland and Great Britain. Let's have a look at the customs at the first. Now, no tariffs will apply to Northern Ireland goods entering the rest of the UK in any circumstances, and vice versa, because the UK is a single customs territory. So there are no tariffs applied to goods travelling between the two countries. However, tariffs may be imposed on goods that ultimately enter Ireland or the rest of the EU from Great Britain. So this is where goods are going through Northern Ireland into and out of the United Kingdom or Europe through Northern Ireland. Now, what we do know, because it's already happening, is that it's not actually a border in the Irish Sea, but there is an almost imaginary line in the North Sea, whereas where certain goods cross that line from Ireland to Great Britain or back again, there will be some checks that have to be made for customs and security purposes. And those are mainly agri-food movements. So any agricultural goods or any food, livestock, anything like that, plant materials, that may be subject to these checks. Now, the reason for some of these checks is obviously for health and safety, is one of the reasons, because over the years, if you're aware of this, a lot of plants and maybe some animals have come into the country either directly or indirectly, because we didn't realize they were actually coming in, and they've caused some problems to us within the UK because of the effect that they've had on our local environments. Now, we're all aware that there are plants which are taking over the country. There are things like the American crayfish, which have been brought into the country to try to solve a particular problem and are now causing havoc wherever they breed. Grey squirrels have come in and they've affected red squirrel population. All those sort of things, and plants that have been brought in from, say, the Far East, Japan, that have been brought in to cope with a particular problem in this country, but because there are no national predators, they've just taken over. So things like Himalayan balsam, if you're into plants and that sort of thing. So there is quite rightly a lot of checks in place on any agricultural food plant movements that come in and out of the GB. And this is to avoid anything coming in via Northern Ireland or going out via Northern Ireland. The UK authorities are applying EU customs rules to goods entering Northern Ireland. But again, we'll have a look at what's happening to VAT in a moment. Now, these processes are going to be fully digital and eligible to be facilitated by something called the Trade Support Service. Now, that is a free service which is going to be run by HMRC on the gov.uk website. And you can register for this, and that will help you to deal with simplified paperwork and everything that you need for any possible customs declarations. But the whole regime is going to be administered by the UK authorities. So that's what's happening as far as trading is concerned. So now let's have another look at VAT. Whatever happens, if you are selling either from Northern Ireland to Great Britain, domestic VAT is going to be due. So business to consumer, either way. Now, when we come to business, I'm going to reiterate again that this is slightly more complex because the EU is considering Northern Ireland as part of their EU system, but they're also part of the UK system. The EU is considering all imports and exports, all goods are seen as imports and exports that go between Northern Ireland and Great Britain. So we could possibly be looking at that being deferred via postponed accounting on import VAT. However, to ease the situation, the UK has deemed that this is going to be a domestic transaction, so normal VAT rules will apply and the current VAT return entries will be unchanged. So as we understand it, any transactions between Northern Ireland and any part of Great Britain will be exactly the same as a normal UK domestic purchase stroke sale. So the VAT shouldn't change as we understand it today. Hopefully that's going to remain exactly the same. Now let's have a look at what happens when Northern Ireland deals with EU. Now that's the part, the EU transaction part of this, which is not going to change as far as the EU is concerned. So for a business based in Northern Ireland, if they trade with a customer within the EU, the treatment of VAT is going to remain exactly as it is at present. So remember, business to consumer, VAT's charged at the UK rate until the distance selling threshold is reached. VAT numbers will be exchanged and treated as an EU sale for business to business. And business to business services are treated as a reverse charge. So nothing changes if they're dealing with EU. Now, what that means is it's an EU transaction. It's not an import or an export. So therefore, all those import-export documentations and the rules that we need to follow in Great Britain won't apply to Northern Ireland, as I understand it, because they're still part of the European Union for things like that. So on the Northern Ireland VAT return, the full 9 boxes are still going to be used because you're still doing EC sales, because you might still need an EC sales list, which those of us on this side of the Irish Sea, probably we won't have to do anymore. Should that change, or should we get any more information, we will come back to you as soon as we can on that. And finally, trading between the Northern Ireland and non-EU countries, this actually is exactly the same. They're import-exports, and exactly the same thing will happen as we've covered for GB businesses. So if you're in Northern Ireland and you're selling directly to America or China or wherever, it's exactly the same. It's an export, it's zero rated, providing that you fulfill all the rules and regulations that you need to do to prove that it's an export. You can sell at zero rate, exactly the same as we will in Great Britain. Now, the big one that we're waiting to find out that I haven't got very much information on you is what happens if we trade through Northern Ireland to other EU countries. So trade between Northern Ireland and the EU will be unaffected, and the Northern Ireland has unfettered access to both GB and EU markets and will benefit from any free trade agreements that we have signed in the UK. Now, I spoke at length yesterday about the agreements that are being signed. So if you need to know more about that, that is in the first of these 2 presentations. As I've said, Northern Ireland will be part of both the UK and the EU VAT systems. Now, the sale of cross-border services are not subject to the protocol. That's only for goods. So as far as I understand it, if you are selling a service from Northern Ireland, that is going to be treated as any other transaction between the EU and a third country. And we will come back and revisit this once we've had all the final details. And if anybody has any information, be very pleased to hear of it. Please do contact us. And if you've got any other information, please let me know. So before I finish, let's have a quick look at what we've talked about today. So to continue to trade with Europe from the 1st of January, businesses should take some key actions. You must check that you've got the relevant EORI numbers in place. You're advised to appoint a specialist to deal with your import and export declarations. Now, if this is something new, or if you do quite a lot of these, you will find it much quicker process to have a specialist to deal with this. And in some cases, that agent may need to be based in Europe. If you're using a standard freight forwarder, they should be able to deal with a lot of the imports, exports. But please be aware there is likely to be a cost on this because it's a service. You can register for the Trader Support Service if you're moving goods into Northern Ireland. That should help you with any declarations or customs forms or anything that you may need to fill out. You need to check the requirements for charging VAT. So check the rules for exporting and whether you can use the zero rate situation. You need to look at postponed accounting for registering import VAT. Now, we looked at postponed accounting yesterday. And you need to check the situation for any reverse charges, and sale of services and digital services fall into that. If you're involved in VATMOS, you need to look to see whether you need to register with another EU country's VATMOS scheme if you're selling digital services. And as I've said, the situation regarding the Northern Ireland Protocol will be revisited once we have more detail. And that's likely now to be in January before that happens. Now, if you need any more help on this, if you go onto gov.uk/transition or go onto gov.uk and put EU transition in, that will come up and you'll be able to get all the information. And as I said yesterday, and I will repeat today, there are 2 other places that you can go to for information. The Department of Business, Enterprise and Industrial Strategy, BEIS, has an awful lot of information on their website. And also one of our partners that we work with, Avalara, AVALARA, they specialize in this. They have a lot of videos coming up. They have a lot of information on their website. It's all there. Most of it is for free. You can just go on there and look, and it's beautifully explained because that's all they do. I say all they do, that's what they do. And there are some really, really good, well explained videos and presentations that you can look at there. So let me stop sharing my screen and we'll start to have a look at some of the questions. Now, I don't think I'm going to be able to answer many of these questions today. So there's one on the chat line that says, if a UK business supplies a service to an EU business, does the UK business have to note on their invoice that the invoice is 0 rated in a similar way as it is with reverse charge at the moment? Yes, I think you do, because the service is still reverse charge. So I think you do still have to put a comment on there. If a UK business supplies services to an EU business and it's on partial exemption scheme, is it still 0 rated and we note it on the invoice? Yes, I think it's still 0 rated because the partial exemption means that you can claim back the input VAT on something that you sell which is 0 rated. So my answer to that at the moment is yes, I think it is. And it counts so that you can reclaim the input VAT on anything like that, but I will come back and confirm that. Does distance selling only relate to B2C or is it B2B too? At the moment, the distance selling threshold is B2C, because if you're doing B2B, it doesn't matter how much you charge, it's all 0 rated, intra business to business 0, because you're exchanging VAT numbers. So the distance selling threshold is only for business to customers. And that's when, if you're selling a lot to private individuals, you have to then start to use VAT at the other countries. That's Sally. Thank you for that, Sally. And Juliet and your Danka have come in with questions. Hazel has said, is selling a written article to an overseas customer 0 rated? Always thought the service of writing it was in this country and therefore VATable. Well, it is VATable at the moment if you're selling it abroad, but it now could count as an export. So although you're producing it in this country, the fact that it's actually going to another country could mean that it's 0 rated, because as I said, if you're a bookkeeper, one of our members, and you've got a client abroad at the moment, you've got to charge them VAT. Now, from the 1st of January, you don't charge them VAT, and that should be cheaper for them. So I think it is probably the same with a written article, but we will take a note of all these questions. I will look them up and I will come back. And Anna's just come back and said, you've answered my question on the online music courses. I thought, thanks, Anna. Yeah, I know I think we've had a chat about that before. Okay, now what I would say is thank you for your time. Thank you for listening. Thank you for putting up those questions. I will take them away and have a look at them. I am going to be answering questions tomorrow on Thankfully It's Friday with Gary. I know Gary has something special that he wants to do tomorrow, but I think I will hopefully get a couple of minutes to answer some questions. And I will try and get back to you. If you have any queries, please email them into member services. The individuals who deal with our emails are looking out for emails. Please put EU for Jackie or something in the title so they know it's for me, and it will come to me and I will deal with it as quickly as I can. Now, I am here tomorrow and I'm also here next Friday for Thankfully It's Friday. So I will try by the time I'm actually, next Friday is my last day before Christmas. So I'm going to try and answer as many questions as I can before next Friday, and then we will deal with them through emails. If you have anything that is specifically very complex and to do with a particular client, then I will deal with you on a one-to-one in an email, or I will call you as I do with the furlough. So I think that's probably all I've got to say today. The contents of both of these presentations have been put together in an article, and that is actually up on our website. So if you go onto bookkeepers.org.uk and you go into resources and news items, if you scroll down, there is an article that I've written on EU VAT import export. Now that covers everything that I've spoken about in the two presentations. It gives you a list of the what to do in the VAT return and which boxes it goes in. So that's there for you now. We are hoping to get the slides up, but I'm not sure when that's going to be. And we are also hoping to get a tab up on the website, which is specifically for import-export VAT for you. But again, that may not be this side of Christmas. It just depends how busy the people that are working on the website are. So thank you all for, oh, and Iris, thank you, has put a link up on the chat line. There is a link to the article there. Thank you, Iris, who's anchoring this behind the scenes. She's there without her screen on, but thank you for that. So Hazel said, made my day. Thank you so much. Oh, you're very sweet, Hazel. And I will be back with you tomorrow. And as I said, thank you so much for your time. This is going out. It has been recorded. It is going out on YouTube and Facebook. So if you want to watch it again, because I'm well aware there is so much information going out on these last two presentations. Somebody did actually say yesterday, I'm probably going to have to watch it 10 times to get it all. Well, you're very welcome if you don't get fed up with me doing it. It's probably just as easy to read the article. So thank you very much for your time. I will see you tomorrow at 2 o'clock for ICB TV 100. Thank you very much, everyone. Bye.